The appointment and qualifications of a company auditor is given under the Companies Act 2013. The auditor is a one who knows everything about a company, especially the financial information, maybe the profits, their sales turnover, and all other details of accounts. Here, the board of directors of the company are responsible for making the appointment of an auditor. Hello everyone, I am Nikhilavati S, Faculty of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. I welcome you all for the sessions on Principles and Practice of Auditing. In today's session, let us discuss about the fourth chapter, that is Company Audit and Audit of Other Entities. In this session, we will be discussing about who is a company auditor. So what are his qualifications? How he is appointed? And also, what are the rights and powers of a company auditor? In the realm of corporate governance and auditing, the role of a company auditor is very crucial in order to bring transparency and accountability in the books of accounts. So let us understand who is a company auditor. A company auditor is responsible for examining the books of accounts of the company to give assurance that the company is in compliance with the accounting standards and rules, as well as it is depicting its true financial position through the financial statements. The appointment and qualifications of a company auditor is given under the Companies Act 2013. So, the appointment of a company auditor. The appointment process of a company auditor is structured to maintain independence and fairness in the auditing process. So, why we need a company auditor? It is to maintain independence or fairness in the auditing process, and the provisions for the appointment of an auditor are outlined in section 139 of the Companies Act 2013. According to the Companies Act 2013, the company auditor, his appointment can be made by the board of directors. So, here the board of directors of the company are responsible for making the appointment of an auditor. In case of a newly incorporated company, the board of directors must appoint an auditor within the 30 days of its registration. And if they fail to do so, an extraordinary general meeting may be conducted in order to appoint the auditor. After the appointment of the first auditor, then the appointment by members in annual general meeting. After the appointment of a first auditor, the subsequent auditors may be appointed by the members of the company in the annual general meeting, and the term for the appointment is 5 years, and however the auditor can be reappointed. The company must ratify the appointment of an auditor in its every annual general meeting. Then coming to the rotation of auditors, to maintain the independence of auditors, every company, some of the specific companies like specially listed companies having a huge amount of financial turnover, they must follow this rule of rotation of auditors, where they need to keep rotating the auditors every 5 years. And appointment by the central government. So, if the board of directors and the members of the company fail to appoint an auditor at the annual general meeting, then they can inform to the central government, where for some of the companies, the central government will appoint an auditor. Then casual vacancy in the office of auditors. Whenever there is a casual vacancy that is created for the post of auditors, maybe due to death of an auditor or some unexpected circumstances, then it is the duty of the board of directors to appoint the auditor within the 30 days. Now, moving on to the qualifications of a company auditor. So, here, in order to appoint an auditor, the auditor must be a chartered accountant, and he must have specific and required qualifications and knowledge in order to audit the accounts of a company. So, according to the section 141 of the Companies Act 2013, the qualifications of an auditor, he must be a chartered accountant. So, here a company auditor can only a chartered accountant or who is a CA, who is a member of the Institute of Chartered Accountants of India, that is ICAI, and is eligible to be appointed as company auditor. And if the auditor is an audit firm, all partners of the firm must be qualified chartered accountants. So, he must be a chartered accountant who is qualified and certified by the Institute of Chartered Accountants of India. Then, he must be a holder of Certificate of Practice. So, in addition to being a qualified CA, the individual must hold a valid certificate of practice issued by the ICAI, that is Institute of Chartered Accountants of India. This allows them to perform the duties of an auditor. Now let us look into what are the rights and duties of a company auditor. So, after being appointed as an auditor, he has got certain rights so that he can see or look into the accounts of the company properly, and it will be helpful for him to draw an opinion on the financial reports of the company. So, he has right to access books and accounts. So, here a company auditor has got the right to access for all the financial records, financial statements and evidence, documents and all kinds of books and accounts that he wants in order to draw a conclusion on whether the financial statements of a company are true or false. Then he has right to obtain information. So, whatever the information that he needs at the time of auditing, he has the right to ask the question and obtain the information. Maybe it's evidence or some bank statements or some details regarding a transactions, etc. Then he has also got duty to report. So, it is the duty of the auditor to draw an audit report after conducting a proper examination of all the books of accounts. It is his duty to give a qualified report that the company's financial statements are true and accurate, or it is his duty to report whether these companies are subject for recorrection or some improvements. Then he has got a duty to maintain confidentiality. So, the auditor is a person, one who knows everything about a company, especially the financial information, maybe the profits, their sales turnover and all other details of accounts. So, he must maintain the confidentiality or the secrecy of this information, or he should not utilize any of this information with regard to the financial details of the company. He should not share it with other clients or other companies, and also he should not gain a personal advantage or using this kind of financial information. Now let us study what are the powers of a company auditor. So, the company auditor has got enough power under the Companies Act 2013 in order to perform their duties and responsibilities properly. And these powers are essential for a company auditor in order to access the company's accounts and give a report on the financial statements. Let us see one by one what are the powers that are given to a company auditor. So, here the company auditor has got the right to access books of accounts and other records. So, here the company auditor has the power to access all kinds of financial related transactions and records and books, so that he can get enough information to write a report on the financial statements whether they are true or fair. And also, his right is not limited to the main office. Say for example, if company A has a main branch and many sub branches, then the auditor of company A has got the power to access the books and records of all other branches of that particular company. So, this right is important to ensure the completeness of the financial records and also to give assurance to all the stakeholders that the company's financial position is true. Then the auditor has the right to obtain information and explanations. So here it is the right of an auditor to seek for explanation or whenever he has some doubts or whenever he want to confirm that that particular transaction has happened. It might be related to the assets or the investments or the liabilities of a company. So, or it might be related to the cash sales or cash purchases. So, whatever the auditor demands, the information that the auditor wants should be supplied by the client or that particular company. The company or the client is legally bound to provide any kind of information related to the financial statements to the auditor. Say for example, if the auditor of ABC Limited sees that there is a significant increase in the inventory levels, then the auditor has got the right to ask the management of that particular company, so what is the reason for this change? Then the auditor has got the right to visit branches and conduct an audit. So if a company has multiple branches, then the auditor has the right not only to access the books of accounts and audit of that particular company or the main branch, but also to visit all its branches and conduct an audit so that he will get a comprehensive understanding on the financial position of that particular business and he can draw a good conclusion on whether the company's reports or the financial statements are qualified or unqualified. Sometimes the auditor can appoint other auditors from their firm in order to audit the books of accounts of all other branches of that particular company. Then the auditor has got the right to receive notice and attend annual general meetings. So here it is again the power that an auditor has, that he need to receive the notices of annual general meetings that are conducted by their client's company, or they can also attend the annual general meeting of that particular company and raise the issues regarding any of the financial transactions or the financial statements. They can also give suggestions on the improvements of their financial reporting. Then he has got the right to report to shareholders. So here it is the duty of the auditor to report to the shareholders that whether the company is showing its financial position truly and accurately in the financial statements or not. So he has got the right to report to the shareholders if the company is not depicting its true positions. So they can directly inform the shareholders that the company's accounts are not true and fair. The auditor has got the right to make qualified reports. So qualified reports means if the auditor finds out any of the mistakes or errors or frauds or any of the issues which have problem in the financial statements or reporting, he can directly make a qualified report stating and mentioning all those issues in his report. The auditor has got the right to report to government and regulatory authorities. That means in case of any frauds and mismanagement of that particular company, the auditor has the power to report it to directly to the regulatory authorities or to the government, stating what kind of activity, or if the company is into some illegal activities or some kind of mismanagement, then he can inform to the government. It is important so that he can safeguard the interest of all the stakeholders and shareholders and other clients who are in connection with that particular business. Then he has also got the right to remuneration. So whatever the work that the auditor does in the company while auditing process, and for his work of auditing and providing the report, he has got the right to receive the remuneration. So the auditor cannot take the advantage of other gifts and receiving of more amount in order to draw an report in favor of that particular company. Rather, whatever the required amount of, or according to his qualification and the work, so whatever the remuneration that he has the right to receive must be received by the auditor. So these powers of an auditor are designed in such a way that they are able to perform their duties without any kind of disturbances, and they can get a complete access on the financial records of that particular company. So, for every business, company auditor and appointment is very important, as a proper examination of books of accounts can be done. This was all regarding the company auditor, its appointment, rights and duties, and powers of the company auditor. Hope you all have understood. Thank you.